Joining me now are Sandy Viller, the co-portfolio manager of the Viller Balanced Fund, and Michelle Meyer, BofA Global Research Head of U.S. Economics. Welcome to both of you. Michelle, first of all, reality check on the jobs report. Not as bad as it looked?
It wasn't. I mean, the headline was obviously a disappointment, coming in well below expectations. But look at the details of the report. We have an unemployment rate that's at 4.2%. And that occurred despite the fact that the workforce actually increased. So what that tells us is that people entered the labor market and they were able to find jobs, while the people who were sitting there unemployed were also able to find jobs. So that's actually a very encouraging dynamic in the labor market, which shows that it is still one that there's plenty of job opportunities. Wages are still on the rise, and we expect that trend to continue for some time now.
Sandy Viller from Viller Balanced Fund, you say that if things keep dropping, you're going to buy. But I wonder, because you think Omicron possibly, temporary. But what about sentiment? What about valuation? Might there be a valuation reset, even if things aren't as bad as they look?
Yeah, I mean, this is interesting because with the Omicron variant, rippling through, what does this do to inflation? What does this mean for the Fed? Possibly this could dampen the economy, and maybe the Fed, while they're expected to possibly raise, 25 basis points twice by the end of 2022, maybe that gets pushed back a little bit. They've done a marvelous job of sort of decoupling the taper with raising rates. So I'm trying to find opportunities, and frankly, we've got a couple of small mid-cap stocks that are hitting sort of trough valuations that are quite appealing. And I want to be more on the reopening play than trying to play defense at this particular moment.
So, Michelle, any thoughts on what safety means at this point in this market? Rick Santelli was just telling us, what yields are doing. Bonds have been weird up to this point. It looked like people were looking for safety in Apple a couple days ago before they weren't. So what is safe?
Well, I think this is an economy and a market that is heavily influenced by the path of COVID. We have learned that time and again. It is still a pandemic economy, which means, to Sandy's points, people are trying to sort out, do you look towards the reopening of the economy and see how that translates to equity performance? Or do you start to think about the fact that maybe the services side of the economy is going to have a bit of a hit if the variant actually does lead to this big increase of cases? So to me, I think what we have to continuously remind ourselves is that we are still very much influenced when we're thinking about the macroeconomy and the markets by the path of the pandemic.